and welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this Friday afternoon. I hope you all had a great Christmas time. This is going to be, is it actually? No, it's not the last episode of the year, but there's some echo. Let me check. There's still going to be an episode on Monday and Tuesday, if I'm not mistaken. I'm going to check the holiday schedule. And while I do that, let's already get the usual disclaimer out of the way. Everything that I share during this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using in this live stream, so the broker, the charting software, the strategy I'm following, and so on, are all linked in the video description down below. And the one thing I truly recommend, maybe as your New Year's resolution, if you haven't done so, is to check out the Elliott Wave principle, the strategy that I'm following, that you can read for free when you use the link in the description down below. With that said, yeah, there's a holiday on the 1st. So, which means we still have 2 live streams this month and this year, so it's not the last stream of the year. Today's stream, we start with a slight red touch, although yesterday it was a green touch and we didn't have a stream yesterday, or yesterday market were also open. Yeah, and on Christmas they were also partially open, but we didn't have a stream. Overall, I'm happy to report, if we, well, the dashboard changed a little bit. Ever since I moved to Interactive Broker in the middle of May, we can see that we were there was at minus 12% because I had a small balance between 500 and 2,000 euro to pay the monthly fees for the data feeds. So, which then as a percentage caused like a bigger downturn. But ever since I actively switched to Interactive Broker, so from those minus 12, we are now at plus 91, which makes it a plus 103% return since the middle of May, which means a little bit more than 6 months for 100% return. Mostly with GameStop and by writing initially cash secured puts until we got our shares assigned and GameStop dropped in value a little bit. And then by writing covered calls, more covered calls, and obviously by the increase of in value of our shares. So it's been a quite profitable trading year as far as performance goes. Yeah, we have some notifications. There is going to be a special dividend on Immersion. Immersion, we hold, I think, 50 shares. So for us, that's, not that much. 4 shares are like $1, so like a handful of dollars. Faraday futures had volume increase, and everything else is not that relevant. Let's see what we can cover today. As I said, I hope you all had pleasant Christmas holidays if you were celebrating, and even if you were not, at least a pleasant time with your family. So GameStop, as we noted, or as you might have noticed, moved higher, a little bit unexpected. There we still have the option that we are looking at a flat correction. So where this is basically wave A, this is wave B now, and this would then be wave C. If we exceed the $35 mark, then that option flies out of the window and our wave 4 actually then finished here, which is possible. And then we would now already be in wave 5. So we'll have to keep an eye on this. For my positions, that doesn't change a lot. I mean, our $30 covered calls, I would have to consider if I want to roll them, to be honest. Yeah. I mean, I could roll them break even right now, apparently, or markets are open. So they're going to be at a slight loss probably because we are above 30. But we'll have to consider the option. So if I were to buy back the $30 covered calls, and instead I would need to roll them out. So let's add the weeklies to that. So January 24th, we'd need to get around 500 still. So I probably would need to roll them at least into February if I would want to roll them for a credit up and higher. However, that would also, it's tricky, you know. If this turns out to be a flat correction, then we would go down here and rolling them now. I probably would want to roll them then further. So right now for the January 17th, we still have 3 weeks exactly left to roll them or until expiration. But we have to consider that I have them open here. I think those are the ones, yeah. That if that basically if we go above 30, we start to miss out because our shares would get called away at 30, yeah. Which means even right now at 32, or we're at 32, yeah. We'd miss out on $1,200. However, we got $2,800 in premium, so only at 34.80 would we start to really lose money. I mean, technically, we already basically the $1,200 that we would be missing out here is already what we would be would have to consider like deducted from the $2,800 premium that we got, but we really start missing out if we go above 34.80. Yeah. Now the question would be, do I want to just roll out those calls? So it's going to be a tricky choice. I mean, on one hand, I've been saying I don't mind if the shares get called away because then I can sell cash secured puts again. Ideally again at a $30 strike price. So so far the shares haven't been called away. There's still a little bit of time till expiration. And the question will be, will this turn out to be a flat correction or not? So it's a tough choice. I'm really not sure either way or which way I want to lean there. So because I mean, it's obviously profitable for me either way. So it's not like it's a tough choice where it's about I risk making a loss, but I risk. So if I roll them out right now for a credit, and then we go down, it basically means that I give up. In that right now, it would be like giving up $2,700 on the current January 17 calls that could still turn out to expire worthless. Yeah. So on the other hand, I think we're gonna wait. So well, if we breach 35, it means I will have to pay extra. Yeah, so I will not be able to close those calls break even, but I actually will have to pay more than the $2,800 that we got for them. But we also would get higher premium for example, 35 or whatever strike price covered calls. Worst case, we just would have to move out further in time. But as long as we don't break the 35 or 34,898 actually, there is still the option that this is a flat correction because a flat can, in a flat wave B, can retrace 100 between 100 and 138%. Yeah. So while originally the assumption was we might look at a regular correction and would get our 5 waves down, and it theoretically is possible that this is the entire correction, although this looks not like a 3-wave move. It would need to be A, B, and C like this, and it just, I don't know, like it looks more like 1, 2, 3, 4, 5, but then we have 5 waves here, A, B's, yeah, I don't know, like I cannot make sense of this part here. Yeah, if anyone has an idea, applying Elliott Wave Theory to this whole mess here, I'm all ears. So like, feel free to share what you think the pattern is, if we already finished our corrective wave and are now in an impulsive wave up, or if this still is part of the correction. But I think I'll just wait for now. So worst case, we miss out on some upside, okay. And best case, this is actually a flat correction and we still will go down, which means then by January 17th, we should be below 30 and the option should expire worthless and I can actually write new calls. Because if I roll them right now, if I roll them only till February, no, January 24th, I could not roll them a lot. I could I could roll them for the same strike or a little higher to not pay any money, to buy time and increase the profit. February 21st is, however, a 2-month period, and rolling it for 2 months to get $300 in 2 months doesn't seem like the smart play here. Maybe it is, yeah. Like obviously, if GameStop were to rally higher now, it might be. But then again, then I can just pick a longer expiration. So I mean, it then means like further time. God, yeah, it's like a tricky choice. So if we go for July, and sell, for example, the 40 calls, and we have 600 shares, that doesn't, yeah, so 360. We'd get around $2,000 for 200 days. So for half a year, we get around a 10% return, or a little bit more than 10% on our current balance. So, and if we go closer, so if we say April, we get around 1,000 for April 17th for 100 days. That's almost 4 months. March would be 600 for 3 months. Yeah, so that's really not that much. So it's like 3% return for 3 months, while rolling it out to the 40 strike price. So I don't know. I mean, I think we're gonna wait and see how this plays out. So if we break the 138, then we'll have to consider if we want to roll them. And if we when we get closer to expiration, yeah, so they could be called away, obviously, at any time, the shares, but I think we'll just wait and see, because I still believe that we are due a bigger correction, although it becomes less likely with the upwards movement. It's still possible, as said, that this is a flat, but yeah, like we're in a point or in a territory where it's just where we just have to consider the alternative that the correction is finished with this move down here, and that from here we actually are in the next 5 waves up. And then even so, I mean, then we would get the next 5 wave up, but then even so, after that, we would get our next corrective wave down. So yeah, we're gonna wait. So we're going to wait. So we would, by the way, we would need to break the, what ideally, I mean, ideally for starters, at least the low here at 30, to have some kind of hope that this will be still part of the correction. But we're gonna wait in GameStop, yeah. So long term, I'm bullish, but short term, I hope that I'm gonna say assumption, because I'm really not 100% confident with the labeling right now, but that they are correct. Yeah, well, time will tell. Either way, I think for this year we've done well, or I did well. 6 months, 100% return. Thank you very much. So, and it's another great trading year. And I'm again wondering where the fuck my Lambo is, but yeah. But yeah, so we're just gonna wait. And if the shares get called away, we basically just realize our cash again. We can sell cash secured puts. The premiums for those are, well, not as juicy. So if we look at whatever weekly premiums, January 3rd, $30. Yeah, it's like $70. So we could in a week make around $400. So that's like 2% in a week right now. So if the shares would be called away right now and so on, or yeah, maybe a little bit more than that for 2 weeks, blah, blah, blah. So we're just gonna wait. Yeah, obviously once GameStop starts to take off, and again, I believe there's way more upside to come, and the 600 shares are gonna be called away, we definitely will miss out on 600 times whatever move we get. But yeah, we're not gonna try to chase big profits with unnecessary risks, and I'm not gonna roll them out now. Although if I roll them out now, and we then go down, I can close out those, but they will not decay as much as the $30 on January 17th would. So no, we're gonna hold those, yeah. So yeah, tricky, but yeah. Let's take a look. Barnes & Noble Educational, or yeah, Education Inc. I still believe there's more upside to come. We'll have to keep an eye on if we go up from here. If we go much further down here, then we will have a problem. I mean, first of all, because our positions average is around 1040. even though we bought a little bit too early here, and then we bought here, here, and here. So we called 3 of the bottoms right, and the initial buy-in, however, that was called wrong. I think we entered here on the upwards move on the assumption that we might have finished ABC on the 38.2 retracement, ignoring that we actually didn't nicely bounce on 38.2, and then got it right on the 61.8 retracement, where we had other aspects that point toward this as well. But yeah, so if we go further down here, then there's going to be some trouble, but I think that won't be the case. So we're going to hold our shares here. And yeah, grab doesn't matter for now. We still have a year. Yeah, depending on how we develop here, and we only have $50 risk in grab, so I'm not even gonna bother to look into it right now. Immersion, yeah, like should go further up. So of course we're still waiting for the break. Oh no, yeah, we're getting close to finally breaking the top here. That would be one additional confirmation that we indeed finished our correction here. So one can hope. Neo now again made a new low or not, like low 428, and here we had the low 420. Okay, it's the same, yeah. So that's a tricky one. So either this is 1, 2 and we get wave 3, or this is actually somehow part of the correction, and from here we might go up, or I'm wrong. So we're gonna hold our 100 Neo shares. Novavax, yeah, now moving sideways, but we should eventually go up. However, my calls expire January 17th, so, and they are $20 calls, so that miracle likely will not happen. Yeah, we're gonna eat a loss, okay, but it's only $250, so we'll survive that as well. And it's already priced in because we already paid the premium for those calls, so it's not like the $250 would disappear then. Bitcoin, so moving into crypto a little bit. Tricky one. There might be a bigger correction afoot, so we might have, even though it looks almost perfectly like a flat correction, we might have, I don't know where we are wrong here. So it would need to be that spike down here just makes it a flat correction. I don't see any other pattern here because we have 3 waves, 5 waves, 3 waves, 5 waves, followed by this spike down here. But then this part here doesn't make too much sense because it's not fully 5 waves. And then here we retrace that far. Here we had the low 92, 115, and here we had the low at 90. So that's lower, yeah, a little. And yeah, if we break the 92 here, then we have to worry. Our average is somewhere here at 95, so we're still slightly at or break even, slight profit, something like that. Visually, we have a 5-wave pattern in here, which would indicate then followed by a correction and then further upwards movement. So actually, I would say if we break the, what do we have here, the low at 92, 360, then something's afoot. But yeah, still gonna hold our Bitcoin position. XRP, as said, should move sideways and down. XYO now potentially has hit the bottom here, but we still will not jump into it. We don't want to get out of our Bitcoin position just now. So we're waiting. Storage should go up. So that should be a corrective wave that finished here. We're on a 3-day chart, so within 2 or 3 weeks, we should know more. Our take profit is at 80 cents, so yeah. So some slightly below the 61.8 expansion here. And what else matters? H&T, yeah, there should be more upside, and the rest doesn't matter for us. And DJT should still move sideways and up. I've been saying that we're going up for some time now, so actually like for 20 to 30%. We don't hold a horse in the race because our funds are tied up in other positions, and I consider the company hugely overvalued, but I believe again that there is huge upside still. Front line, I forgot our labeling there. We called the earnings drop, and that we should go to 1341. It looks like we bounced nicely on 3041. That would be a nice entry. So there are multiple aspects that point towards this being the end of the correction. So if somebody wants to take the gamble, although there's also a pattern that would suggest there's further downward movement, but before that we would likely go get a recovery a little bit. So to realize like what's that, a 20% profit or 15% profit. So but yeah, I don't have a horse in that race either. So do with that information what you will. Nvidia is, what's Nvidia doing? bounced here, very nice free wave corrective move, almost perfect. So we likely have our next 1, 2, 3, 4, 5. So probably we'll see the first quarter in a rally upwards. If you don't want to jump in right now, I think jumping in if we break the 145.96 would make sense. Or just getting call options, so you limit your risk to the premium. So, and other than that, SMCI, I believe, I mean, I've been saying since here that we should go down, and since then we've lost what we were here at almost 50. So looks like I've been right. My goal there is around 5. Again, I don't have a position, but we've been labeling it and watching it, and we called a lot of it quite well. Yeah, and I think that's it. We don't have labels on the chart for most other things, and I'm not feeling 100% fit right now. So I've been. We spent Christmas with family in Austria, but before that I was slightly sick, and Irina was slightly sick first, and so on. And yeah, and as you can see, there's a little bit of chaos. I got my new. Oh, that you cannot see, or can you? Can you? No, move the other way. So actually, here you can see the home server that I started a couple months ago. But now that small little thing, the Johnspo N1 case actually ran out of space. And so I got the Johnspo N5, just arrived today. And I'm gonna spend tomorrow building that, so moving everything into the new case. So there's then space for, instead of 5, for 12 hard drives, which means considering the usual 18 terabyte drives that I'm using, that thing will then be sufficient for up to 200 terabyte. Or 190 if we consider parity drives, which will be quite sufficient, I guess, for the future. I actually wanted to get a 19-inch version, but our rack that you can also, or could also see here on the floor, is not deep enough. So that option flew out of the window, and I didn't want to buy a new rack. I might at some point, but yeah. Anyway, that's off topic from the trading. I think so. I hope you all had also a successful trading year. As far as my trading year went, again, it's not the last stream of the year yet, but still, obviously, the beginning of the year was a little bit like a roller coaster because was still trading mostly on eToro, the Nasdaq with 20 times leverage, so it was like 5-digit swings on semi-daily basis, so quite stressful, to be honest. And then switching to Interactive Broker was actually a smart choice because, first of all, there are more instruments available. Second of all, the fees are much lower. And although there is no leverage available, which on one hand is a downside, but it also takes out the risk, yeah, or reduces the risk, yeah. Obviously means also reduced profits. But just the fact that I can write and buy options here also changes the equation by a lot. We obviously had a few trades that didn't play well this year, so my call options, or actually cash secured puts in Faraday futures, where we now, after reverse split, hold 5 shares, and are, I mean, there we are like technically, the premium is already considered, yeah. So we are $70 in minus, so it's not the world. My positions in Greenwave that are at a $400 loss, so those were not that great either. And obviously, I think my worst investment this year was outside of like some missed trades in the Nasdaq with 20 times leverage. But since we switched to Interactive Broker, my worst trade this year was SunPower. They declared bankruptcy, so that's a $450 loss. But despite those, obviously mostly to GameStop, and everybody that believes in GameStop and whatnot will say it's anyway a no-brainer that they go up, and if I would have bought at $10, I could have made more profit, blah, 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 and whatnot, yeah. But considering that we joined with Interactive Broker, joined the journey at around the $20 area, and then we're selling cash secured puts, or actually even the above $30 area was where we joined, and made some premium this way, got our shares assigned at 30, or technically at 24 if we consider the premium that we received, and then just wrote covered calls. Also suboptimally, we could have picked lower strike prices if we would have done a better job labeling the patterns. So we played it safe and never sold any call below the strike price that we got assigned at. We could have played it even safer, or not safer, we could have played it on the more profitable side if we would have been willing to give back some of the premium. But despite all of that, so despite mistakes on my end, some wrong picks, okay, Some spots where my lack of knowledge with the trade station of Interactive Broker in terms of how to properly set trailing stop losses and so on caused us to not get out of positions as good as we could and so on. So despite all of that, still we're looking at 100% return for the year. By Monday, that might change a little bit, or not for the year, for the half year on Interactive Broker. But so by Monday, that might change a little bit. It might be 90, it might be 80, it might be 110 or so. It doesn't really matter that much, to be honest. Even if it would be 50, it would be an incredible return. That's probably not sustainable for the far future. But I'm curious to see how good 2025 is going to treat us already. Yeah, anyway, long story short, since there are no requests in the chat to review specific stocks, and I quickly had a glance on all the things that, in quotes, matter to me right now, I think I'm going to call it a day. I'm going to maybe grab myself, after I finish my coffee, maybe grab myself another tea, and not sure if I will be highly productive for the rest of the day or if it will just be a couch vegetable. Maybe I'll jump on Twitch and play some Xbox to, yeah, like, I don't know, either in Hitman or in Red Dead Redemption or something. But yeah, thank you also everyone that was part of my journey this year so far. Although again, it's not the last stream of the year, but it feels like fitting on a Friday. And as said, I hope you all had a pleasant 2025 and a successful trading year so far. And also a great next year. Again, I'm jumping ahead here because I probably will say the same thing on Monday and Tuesday. But yeah, that's it for today. Thanks for stopping by. Right, let's switch there one last time. Don't forget, like, subscribe, enable notifications. And with that, then see you all on Monday with the second to last episode of Daily Market Mastery in 2024. Till then, bye-bye.